How's it going, everybody? My name is Antonio, and this is yet another one of the face-to-face interviews that I did in London. And this is not a flashy headline; it's not a flashy instant gratification video either, and it will not give you the next breaking news or like the top three lithium stocks that will 10x over the next 17 seconds. It's just a conversation with a successful exploration entrepreneur who he's put a few companies together. He's been consistently able to raise capital for his stories, and he's just um, a normal person who I don't know what to say. Most people I talk to, are newsletter writers or analysts, or they sell something of that sort, and they like working with theories and what could be and all that. And that's valuable. Okay, there's nothing wrong with that. I appreciate that. They're all like 5 galaxies smarter than me. Some maybe 6, but I wanted to talk to Stephen and pick his brain on how he actually approaches deal making and putting down a lot of money. In most cases, no. Well, as you're about to hear, most of the times nothing more but a geologist's dream. And I talked to him about how he knows the right people to invest in and all that. And make no mistake, though, Stephen is a promoter. He was in London to promote his companies, and he paid for the production of this video. So the room and all that you're going to see, that was all covered by his companies. So he will be talking about those, as he should be. He'd be a bad promoter if he'd get paid for airtime and didn't mention the companies. But I thought there was a lot of gems and valuable information in this conversation to just think about. So let me not rant on like I did at the previous intro and just play that on here. With all that said, Stephen, thank you for investing time with me today, sir.
Pleasure. Great to be here, Antonio.
The pleasure is all mine, of course. This is the first time that we're doing an interview. I've known you since this summer. So why don't you tell me who you are and why you think you're worth listening to?
Well, my name's Stephen Steward. I'm the CEO, chairman of QC Copper and the Ore Group. I'm here in London to talk about QC Copper specifically, but as you know, I'm also the founder of the Ore Group, which is a group of companies based out of Toronto that invest in and develop and ultimately de-risk natural resource projects across Canada. And we're here with my colleagues, and we're here for Mines and Money. We've been here for the Northern Miner Symposium, and we're here spreading the word in the great city of London.
Have you been successful in doing that so far, in your opinion?
Yeah, I think so. I mean, the audience really isn't listening right now. I mean, if I can be, frank, it really takes a bonanza whole or event to get people's attention in a market like this. For the last number of months, maybe even a year, I've stopped counting. It's just been very challenging to get ahead. And so you can speak and some people show up, but the crowds are thinner, and I think the interest just is dwindling. This does not concern me. This is par for the course for our industry. In fact, being part of the Ore Group, we've always taken a counter-cyclical approach. And so while these times when no one is listening, it's challenging from an issuer perspective. From QC's copper's share price is probably at its 2-year low. It's being valued at the same price it was before it came out with this 104 million ton resource. So from there, that's difficult. But from new opportunities, and that's, speaking from the Ore Group side, when we're always looking for new opportunities, this is where you get to put them together. Mm-hmm. So, there's good times and bad times, but there's always an opportunity to do something in this industry. And so, that's on the issuer side, we're being smart about our allocation of capital. We're focused. We're focused on making sure we get a return on investment. For QC Copper is a little unique in the sense that we're not stopping our activities, which is something I would advocate doing for many companies, because if you're not getting capital appreciation or share price appreciation for work, why are you doing it? But QC Copper has a very specific mission, which it's focused on, which is updating its mineral resource estimate. It began that mission prior to the downturn, and it will complete that. And I think that's a major milestone. So, and we're well financed to do it. So there's no question of us looking to finance to complete it. That's not the case. So we will work towards completing that mineral resource update, and then we'll evaluate the world when that comes out, and we'll see what does the market, what does the world want from a company like QC Copper, and we'll make the appropriate decisions.
And that's specifically QC Copper and gold. What I'm wondering about is a broader picture of the Ore Group and how, I guess you're you you found the org group, right? You founded the org group.
Yes, I did.
How did you how do you even start? How do you even begin to look for projects? How do you determine a strategy? That's sort of the topic that I want to
Sure.
touch upon here today. And it's because you're not a psychologist to know human behavior. You're not an economist. You're not a geologist. But then you know you're doing this job, or you're doing a good job of putting these companies together. How do you do that? How do you start? Is it top down? You look at the economy, you pick a metal, and you start looking for a project. How do you do that?
Well, I mean, I guess there's sort of two answers to that. How did I start? Well, it all started off with ore finders. Okay, so that's how the ore group ultimately started. What evolved into what became the ore group was ore finders, which was a company. We started back in 2012, and I was involved in putting it together along with my father. But we were not active managers until the downturn came. And then the downturn came, and I was, I guess, the primary on removing the active manager at the time, who was a great guy, but not the right guy in that market. And I think the company had $100,000 in the bank, and I think the share price was half a penny.
Hmm.
And so we just changed the strategy. And again, it was about, just as I was alluding to before, it wasn't about spending money, it was about preserving money and focusing the business and having the right strategy in a very cyclical market. So that's how I got my start in what is now the ore group. And then from there, ore finders, I guess just naturally, I'm opportunistic. I'm a treasure hunter at heart. I'm a deal, I don't say junkie's not the right way, but I love to do the deals. I love to look at opportunities. They have to be the right opportunities. I don't have time to chase opportunities that I don't see a future in, because I think, ultimately, that will fail, and I don't want to waste my time. So I look for the right deals, the right people. And if they come across our plate, and we get a lot of deal flow, which obviously has increased, as we, gain more experience and credibility and develop our network. The next company that was started was QC Copper. So we spun QC Copper out of ore finders. So we used that as the mothership, which sort of became part of our model. And ore finders retains equity interest in 3 of the ore group companies as a result of that model that came subsequent. But QC Copper was about an asset. It was all about a particular asset called the Opimiska. It came across our desk. It didn't fit in ore finders because I like to structure things within a very specific commodity. And also, I like it to be geographically focused, because you really have to have a tight, clear message to deliver to shareholders. So you lose their attention. You can lose their attention with one project, one commodity, quick, if you don't know how to tell the story quickly. So you start doing multi-commodities, multi-jurisdictions. It gets very complicated, and you don't get value for your secondary, tertiary assets if they're not sort of, they don't coalesce well together. So we came across, and not only that, the vendors of Opimiska, private family, didn't want to be into another company. They wanted a fresh vehicle. So we came up with a concept to acquire it privately, spin it off. We dividended shares out to ore finders as part of that transaction, and ore finders also retained half of those created shares of what is now QC Copper on its balance sheet. It still holds them to this day. And as I said, it was about the asset. So the Opimiska was an asset that had been, I guess, in my ear by Charles Baudry. And Charles has been working with Charles for well over a decade now. And Charles is one of my most trusted confidants, industry expert. He's a really brilliant geologist. And he had this relationship with the family who owned the Opimiska. In fact, he got his first job from them back in the 80s, and always maintained this good relationship with the Gauchers. And in fact, had been assisting them in digitizing all of the analog data. It's a huge database. So he had just sort of been doing that piecemeal over the years. When he had time, he was helping them out. But he was always like, we got to buy this. We had tried many times, and eventually we struck a deal that was in late 2019. We did the spinoff transaction. It was a success for us. It was our second company, but it didn't really make any waves. Copper was not in vogue at the time. Nobody was talking about copper being the new green metal and whatnot. So I mean, that's how these things tend to happen. Right now, lithium is hot. 3 years ago, nobody cared. So that's we were a very small company at the time, despite it having really interesting story, interesting provenance, and we certainly saw it in a different light. in the sense that this, it was high grade vein system, but it held bulk tonnage potential. There's no question about that. We saw that in the data. It was Charles' sort of vision. And then we raised a little bit of money. We put out some, what I thought were very, very flashy drill holes. But I mean, again, we were still probably a $3 or $5 million company at the time. And so nobody really knew what it was. And it took a succession of drill programs and a successions of evolutions in the market, and the development of the copper narrative, if you will, for people to get excited. And then there were some, I think, really intelligent people who spend their time weeding through the thousands of projects and companies and looking for the diamonds in the rough. And there were some smart people who saw, what we saw, and got behind us and helped us finance, helped us introduce us to people who have just helped move the story forward. And as I said before, that culminated in the resource that we published a year ago, which really took the market by storm. At least I think we doubled in probably 2 weeks, something like that. It was it was very well received, but it came out of sort of left field. Nobody, while we were certainly telling anybody who was listening, we expect this to be very interesting. We didn't know, certainly didn't forecast any of the numbers, but we knew we had what we thought see as an economic situation, like Opemiska is going to be a mine again. So we're trying to telegraph that, but nobody cares until you have quantified some capacity. And then we did, and then we delivered that resource. We financed ourselves very well. We did great financing. We took down, we sold a piece of base load, which again, was another evolution of the ore group. As QC Copper sort of did the ore finders model. It spun off base load. As I sort of go off on a tangent, but somewhere along the line of QC Copper story, we decided to get into the uranium business again when it was sub $20. And I always knew I wanted to do uranium. And Charles and I always, we talk about ideas, commodities. It always starts with the commodity.
Yeah, but how did that happen? I guess I'm sorry for interrupting here. Had to be that, but that's the interesting part. How did you decide that? How did you decide, like, we want to go? Why don't you just sell the property to the next best guy and do something with the money in your company? How do you decide to go
into uranium? Yeah. Well, look, I mean, I'm just evaluating. I pay very close attention to the macro. Okay, so that's just sort of where my general interests, personal interests lie, and so I pay close attention to that. And I'm always looking for commodities that are hated, that have a real use. And uranium has and I know the uranium story very well, and it had a unique situation where obviously after 2011 it just became hated. But I mean, we knew that had to change. It was going to change. It was inevitable. And Charles and I had been talking about uranium opportunities, and we always we usually start with the asset, just like QC Copper started with Opemiska. Baseload started with a thesis on uranium, but we looked at a bunch of assets and nothing really got us excited. And then I came across James. And so I introduced, I think it was, this was at a PDAC, 3-4 years ago. I introduced Charles and James, and they just sort of clicked like that. And they had ideas about, what we now call, baseload 2.0, which was really about getting out of the basin itself and looking for basin rocks, which wasn't a novel idea, but it was an idea that seemed to have been forgotten as people chase these high-grade unconformity deposits. So, we decided not to chase, the 10, 15, 20%, which is really sexy, but often uneconomic. And so we said, okay, well, let's go back to first principles, back to basics here. What makes sense? And he and James had this thesis. So, I mean, that's how it all started. And baseload didn't acquire assets from anybody else. It was staked based off the intellectual property of James and Charles as well. And so that's how that started. And again, we sort of got a little bit lucky. I think we timed it very well. We got lucky. I mean, you never quite know when the timing is going to come, and it typically always takes longer than you think or hope. I was prepared. People said, "Oh, you're crazy. You get uranium business. You're crazy." Some smart people too. We were prepared to sort of eat dirt, and from a share price perspective, for as long as it took. Just as long as we prepared, we put ourselves in front of the wave that we knew was going to come, and that's the same, story for almost every commodity. But with our costs low, but as I was saying, we got lucky because I guess as we were getting towards the finish point of taking baseload public, which takes a year, soup to nuts, if you're good at it, uranium started to take off. And so, virtually with no asset, no assets other than a staked property, which is nothing more than you just go on the computer and you click it. Had no real drill holes to speak of. You had regional geophysics, etc. So nothing other than good geological detective work done by our guys, to sort of define value. We were getting really good valuations just because uranium was kind of like what lithium is now. And so we started off, with a lot of excitement. I think it had, the highest valuation of all of our ore group companies without drilling a hole. That's the resource business. So, and then, as it turns out, James was right. And we drilled, on I think it was on our fourth or fifth hole, whatever it was, but certainly our first drill program, we hit uranium. And then I don't want to say the rest is history. There's still, a long way to go, but it was a grassroots discovery. Of course, made at the same time, I think we did it a week or two later than 92 Energy, but we were drilling the same thing. Neither party knew they were going to hit anything, but we just happened to be neighbors, and we both hit within weeks apart from each other. And then I guess both companies have been successfully raising capital to continually drill it.
How do you know that's all worth your time? You say you met James, he found this property. He looked at this property, he said it's worth to drill it. How do you know to trust him? You're not a geologist. I assume you know a bunch of things, but what are some basic stuff that you look at, or something that I could take away and do in my own research? Because I'm visiting this conference, I'm talking to all these guys. I'm generally a person who likes to like people, if that makes sense to you. Like if I'm looking for a reason to like you, I'm not looking for a reason to dislike you. And so if we're talking, there's high chance of me liking you. So if CEO wants to sell me something, I'm also naive. I know that about myself, so I'm trying to be careful with it. But they could probably sell me to it. So how do I know to trust them?
It's experience, I suppose. I don't know anything for sure ever. But it all comes down to the people. The ore group is nothing more than a collection of the people who, work with us. And so, it starts with Charles. Before I knew James, I had an instant rapport with James, but I didn't know him from, anybody. I typically introduce people I have developed relationships. In this case, it was Charles. Okay. So I had, explicit trust with Charles, and professional respect. So, Charles is, my partner. And as I said, when he and James connected, they had this, a professional rapport, but also saw, had a different idea that they had both individually been thinking about. And so that went a long way. And it didn't happen overnight. And James wasn't sold overnight either. If you recall, James was working, as a VPX for, an arm's length company at the time. And so, it took some time. And in fact, I haven't talked about this with James, but, there was a time he called me up. He's like, Steve, I can't do this. I can't do this. It was just so he had a moment. And I said, James, come on, we got an opportunity here. Like, I'm going to get behind you. I believe in you. We got something here. Like, let's just go. But I didn't know. I didn't know anything for sure. This was long before we drilled the drill hole, and we may not even stake the property. But I knew, I just had this feeling about James. And going back, how I sort of found James, if I recall correctly. As you know, I'm also associated with, or the chairman of the Young Mining Professionals, and every year we do the Peter Monk and Ira Thomas Award for the top entrepreneur. And so I get to see all sorts of people. And James I think he was nominated by Anthony Vaccaro, who was the chairman or the boss of Northern Miner, and he put him forward. He didn't win, but the name stuck with me, and he was like, "Oh, uranium." I'm like, interesting. I'm looking for somebody in uranium. And so I just sort of started reading about James, and he had this, reputation from people I spoke with. And then again, so that sort of got the ball rolling. And then I introduced it to Charles and some of our other guys. And we just developed this relationship and trust. I didn't know anything for certain, but we take risks, right? So, but you have to vet these people, and I can know, I just know, I'm an optimist, but I'm a super skeptic. And I guess I've just, whether it's good or not, I've developed a nose for, BS.
So how do you do that? Or maybe what are some of your tricks or something that you look for in a person? Like they touch their nose too much, or is
No,
that
there's no
something like those
tell like
lines?
that. It's just your, my instinct, which is nothing more than a collection of my experiences. I can just, I guess there are patterns of behavior, what they say and what they do. And it's more than just body language, but I guess part of it is body language, but really it's more, how do they communicate? Do they have interesting ideas? Are they just regurgitating other people's ideas? Are they afraid to go, do they just toe the line, or are they willing to say, no, I disagree,
Hmm.
and this is why? And so it's just I don't have a specific formula. It's just kind of intuitive to me, and it's been I guess, as I said before, the my intuition is just a collection of my experiences over the years. I mean, I've met a lot of people that aren't honorable, and or solely looking out for themselves. Well, people look out for themselves. There's nothing wrong with that, but they will have to want to. What I always say is, like, they have to care.
Hmm.
I like people who care about what they do, about their work, about their family. I mean, like, they have to care,
Hmm.
and not everybody cares. So when they care, like, I know you spoke to Tony, like, and James too. Like, those guys just care. Like, they're passionate about what they do, and if you can get guys like that, or girls, that is a difference maker. There are no guarantees. James could have turned the drill 2 degrees west and missed,
Hmm.
right, off a mistake. I mean, who knows? So, but he cares to do the best he can. He really does. And Tony's the same way. Tony also I met through YMP. Ironically enough, I always say YMP is probably been the best single thing I've done for my career. That's not why I did it, but that's sort of how it's evolved. And Tony was again nominated for the Peter Monk Award by Steve Letwin, his former boss at Iron Gold, the CEO there. And so that's how I got introduced to Tony. I mean, so those are sort of quick stories, but it's again, it all comes down to the people. Do they care? Do they have a knowledge of the industry? I mean, you have to have somebody who knows what they're doing. You have to have somebody who's got their own personal network. Both those guys have great personal networks, so they're different types of networks. But when you're faced with a problem, which I have, countless problems thrown at me every day, it's how do you solve them? And usually you have to pick up the phone and find somebody who can assist.
Hmm. What about, there's something I've been wondering about that. I don't know if this is socially appropriate or not, but what about age? What I mean is that people don't want a too young of a CEO with not enough experience. But I've also heard or read people on the internet, when they're anonymous, they would get actually very brutal, as you would know, and they'd be like, "Oh, this guy's 75 years old. He's looking to ride this as a lifestyle company till his dead." It's brutal to say this, but is there reality to it? Like, is that?
Well, I mean, I would say there's truth to that for sure. It's but there are 75-year-olds out there, I assume, that are super hungry. But on the whole, you're going to have a 35-year-old, and they're going to be more hungry.
Hmm.
And they're going to be willing to go the extra mile, because they want to prove themselves. And so, however, you do need to have a counterbalance. They don't always have to be the CEO. You can still have that gray hair. He just doesn't have to be the CEO. They can be an advisor.
Hmm.
The flip side is, youth is an experience, where gray hair is. And so you really do, a company's not just one man or one person. It's a collection of people. Certainly it is, with us. And so, you want to leverage, the experience. Few 35-year-olds have seen it all.
Hmm.
So, you definitely want, and maybe that's more appropriate on the board side, or the chairman. I guess I'm probably considered a little young for the chairman, role, but it is what it is. But all else equal, to answer your question, I'll be very candid. I mean, I like young people, not just because of their, I guess, exuberance and their fresher legs, but that's important, because even to come here to travel, I mean, that's a toll.
Hmm.
It's fine. It's not like we're climbing Mount Everest, but it does take a toll, and not everybody wants to do it. And so you do want to have younger people to sort of go out there and hit the road. One of the complications there is young people don't have young families. So
Hmm.
it's, for me, it's hard. I got a young family. It's hard to sort of get away. But I just lost my train of thought. But I think also that's what I was going to say is the young guys want to make a name for themselves, and so they are determined.
So that right, that was the whole point that they made, is like, if you have someone young who they're probably going to have to keep working in the sector for another 20, 30 years or something, they don't want to mess it up off the bat. They don't want to appear as, the sleazy salesman off the bat. But if someone's 65, 75, they know that they're going to stop working in a couple of years. They don't care about over promoting this, paying themselves $500,000 or even more a year, and just leaving it at that.
I don't know. I wouldn't agree with that necessarily. I mean, I think by the time you're 65, 75, you are, and you're probably not going to change. And, maybe, you are going to do that. But I mean, I don't think, I just don't think that's the typical approach.
Not necessarily. Okay.
By then, if they're doing that, then they were probably doing that when they were 35. And there's no shortage of 35 and 45-year-olds, who do that in this industry and other industries. It's just we're just a microcosm of, the human populace is all. We're no better or no worse. In the mining industry, we have all sorts. Some good, a lot, and some bad, but a lot of good. A lot of good.
This is about the people. When people come, you said the project came across your desk. When people come across your desk, that's sort of how you look at it. That's interesting. What about a project when it is, for example, past operating mine, or it's a project that a lot of people have already tried their luck at, and they failed, or they stopped, or they left for some certain reason? What do you look at to determine whether you want to be the next person who puts money into the ground there?
Well, I love projects that other people have worked on. I mean, it lowers your risk substantially than, call it a grassroots exploration play. Like, for example, baseload grassroots exploration plays, 0 drill holes. You got to be a little bit lucky, to hit it. And, got lucky. It's not, pure luck. Obviously, there's some skill involved. Whereas, Opamiska has a huge amount of data and prior owners, whether it's Falconbridge operated it for 40 years and it was owned privately for 30 years. We came at it with a completely different approach, which isn't, again, not a novel approach. It's the exact same approach as Malartic, same as Detour, same as Cote. I think that approach is, you see a lot more of it now. Obviously, the geological stars have to align in order for that to work. But that's what we saw in the data. And so we had a huge amount of data. And so we were very fortunate to have that work done by Falconbridge. And for whatever reason at the time, be it economics, engineering, nobody was really thinking of an open pit at the time. Same thing with American Eagle. And we weren't the first people on it. I'm not even sure we're the third or fourth, doesn't matter. But there was, geologic knowledge that we can take and I don't say manipulate, but utilize and perhaps look at it in a different way, perhaps layer on new technologies like geophysics. So the EM survey that was done and later looked at by a fresh set of eyes, a guy by the name of Steve McMillan, as well as Tony's uncle, Gary Moreau, who unfortunately passed away. They saw something different. So, the NAC project was drilled, at the surface, and they didn't see any grades that sort of knocked their socks off. So they, ultimately picked up and went away. Then geophysics was done many years later. And then, we saw something down below. And so that's why we're drilling kilometer-long drill holes, right? I mean, if we were just looking to, skim the surface, you'd see 150-meter drill holes, but we're drilling a kilometer. And, if we're drilling 500 meters of barren rock, we shut it down, right? We're drilling into mineralization. It's very clear. And that's why, we keep on going that deep. So, that's an instance where someone else's trash is our treasure, I suppose. But on the same token, you can have projects can be killed, like really killed. And as what's the famous saying is 1 in every 10,000 anomalies is a mine, right? So, just because you can have a drill hole on it doesn't mean there's a different way to look at it. The vast majority of times it's worthless. In fact, it's a liability. And that's where, you come into, you have to evaluate it. And I mean, when I see deals, and I see a lot of deals, some just sort of randomly come across my desk cold call, and I give those less priority. But some that I either we generate ourselves or come to us through, our, network of people that we know and like. And, I sort of give it the sniff test. I'm not a geologist, but I know enough to know, I'm sure I've made many mistakes. I've probably passed over, Voisey's Bay or Hemlo, but you never know. But I can sort of evaluate it because I can't show everything to our technical team because they'll just be totally inundated. So I just try, I pick and choose. I say, that's interesting. And then I'll sort of give the file to somebody and they'll whittle it down. And more often than not, it's a no for whatever reason. And we can't rip everything apart, but, we try and give it a, good look. And that's sort of how we, generate opportunities. And then we do also generate our own ideas. Like, again, Charles just recently in Ore Finders came up with a zinc project. Totally, generated by Charles. His own intellectual property. He's got a good nose for that sort of stuff. But odds are he's wrong, because that's the business, right? But based on a lot of publicly available data and some parsing the pieces of the puzzle together, he's got a thesis, and the only way you can test it is with some drill holes. And so that's good enough for me. When you have somebody who A, cares, B, has turned over a lot of rocks, that's where it's important, especially in geology. You don't want well, it's not you don't want, but odds are you're more seasoned geologist. He who turns over the more rocks wins in geology. So their experience comes into play. So when a guy like that comes up with an idea that, again, is just sort of vetted with me, and we have been talking about it for probably 2 or 3 years. So it doesn't, I have to sort of be convinced that I don't jump at every opportunity. This, the situation has to be sort of right. But those are just examples of how, opportunities come up. Another opportunity, like, for example, Mustango, one of our other companies, that was a unique situation in the sense that we didn't form that company. We, at the time, Ore Finders, and still was looking to consolidate land in the Kirkland Lake area, right? So we were looking at strategic consolidation. I mean, I think everybody from Agnico, down to Ore Finders is looking to consolidate a particular, land trend, right? In us and in Kirkland Lake, and them as well. And we came across that company and saw they had a nice asset, and we went after them. We approached them in a friendly way, and we just found them to be unrealistic in their expectations. I'd suggest perhaps some lifestyle activities going on there, and came to the conclusion that no deal was available under terms. I mean, they wanted just astronomical. I mean, just completely unrealistic. So we looked at the shareholder registry. We saw there's a big block there. Big block owned by a group that we knew. Of course, it was Osisko, and we acquired 31% of the company, and then eventually worked our way towards a proxy battle. So shareholder activism, okay, and so that was, and eventually we won. But that was a high risk venture. I mean, no more or less high risk than drilling a drill hole, but it was high risk to take on those odds because the regulatory world is not conducive to allowing shareholder activism, especially for smaller companies. So the odds are stacked against you. But anyways, that was another way. So we were after the assets, and we just wanted the assets, but we ended up taking over management of the company. And then, it has evolved, and we used it, and we staked other ground, and we raised a bunch of money. And those two companies are, almost the same companies in a sense. Well, they're distinct companies, different shareholders, different assets, but, they look and smell the same. And they ultimately signed concurrent deals with now Agnico, at the time Kirkland Lake Gold, to spend their money to earn into our projects. So I guess what I'm saying is we come at it from all different angles, whether we can stake it, whether we can acquire it, whether we can take over a company. There's no fixed rule book. It's just whatever comes our way, we'll evaluate.
You mentioned there that you passed on the first option to acquire the company, basically because there was maybe some lifestyle activity. How do you determine that? How do I determine that as a share? I'm watching interviews on YouTube. I'm reading their presentations. That's pretty much all that I can see.
Yeah, well, it's obvious if you've been around, as long as I have. It's easy to spot. a couple conversations, it comes down to the financial statements. Where are they putting the money? I mean, in this particular, I don't want to get into this because there's honestly legal situations back there, but I don't think the company, I forgot the specifics, but they hadn't put out a news release in 5-6 years. They had been selling assets to pay G&A. I mean, it was clear cut in that particular instance. Sometimes it's more nuanced. Sometimes you've got, if you've got more in your marketing budget than your drill budget, that's an easy sign. But I mean, it's about, there's no one fact. It has to be a collection of facts put together and thought out, and then everybody can make their own decision on it. I don't think anybody, necessarily, well, I shouldn't say anybody, but the majority don't want to act like that. But I mean, this is it's crazy business. I mean, it's so high risk. And so it's all about staying in the game. Okay. And so, in order to stay in the game, you need money. And so sometimes it is justified to spend more on marketing than drilling. Okay. It's not a rule, but if you can't, make your property payment, because not every time it's about, drill holes. Sometimes a bit of property payment. Sometimes it's about, you need to keep this guy and, you need to raise money. So sometimes money is more important than drill holes. But without the drill holes, you can't create real value. So, I mean, it does come down to the drill holes, but I'm just sort of, talking about a specific instance where maybe, they're more focused on, oh, look, you just have to be in the game. And when that, as I said before, when the wave does come, you need to own your asset and you need to be around. And so you have to be capitalized to do that. And that's why companies are really focused on marketing, because you got to stand out. Of course, that does get sort of manipulated such that people pay their salaries and don't do anything. Now, those are egregious cases. They exist, no question about it, but it's not the norm.
You also seem to be focused on Canada. Is that a choice?
By design.
That's by design specifically. You wouldn't want to operate in any other place, or?
Well, never say never. It really is about how you're set up and who is on your team that is experienced in that particular area. I referenced before being able to solve problems by picking up the phone. I can do that relatively well within Canada, but you put me in Mexico and I don't know who to call. I don't speak the language. I don't understand the laws, the customs, the ejidos. It's different. It's not that I'm totally naive to it, but I'm certainly, better versed in Canada to do that. A guy like Charles has been to Brazil, have been to PNG. We went to PNG, American Eagles started off in PNG. That was the story of American Eagle. American Eagles had two unsuccessful iterations before it achieved some measure of success. Hopefully a lot more to come, but it's about perseverance, like staying in the game. And sort of we had to reposition it. And that last experience in PNG just sort of solidified. The only reason I went there was because again, go back to Charles. Lived there for 2 years. Had two of the directors of the companies were local geologists. So I mean, we checked a lot of the boxes. So it gave me some comfort that if there was a problem, we had local director level people. Who had interests aligned. However, the powers that be down there, overruled our local power. It just didn't work out. I mean, we almost had effectively had a property taken away from us, and so we had to pivot. We pivoted back to Nevada, and then Nevada, was a combination of bad timing and very high risk drilling. Obviously, chasing rewards that are go hand in hand with those types of risks. But ultimately, it was just when we saw that the NAC opportunity in particular, but generally speaking, as you say, Canada, it's just a good place to do business. It's far from perfect. It has, its regulatory and permitting issues are, dare I say, broken. I'm not sure if anywhere, in the world is firing on all cylinders on the permitting side, but certainly in Africa, you can get things permitted much quicker. But of course, I would suggest it's much more, political, if you know what I mean there. So in the sense, if you know the right person, you can get it done. Where even if I was best friends with the prime minister, I don't think that would maybe best friends, but if I was acquaintances, I don't necessarily think that would help my permitting situation, because there's just so many departments and permits one must get that no one person controls it, which is part of the problem. I mean, I would suggest to sort of explain why I think it's broken. I think it can be fixed, but it would require a Herculean effort and a total 180 in approach. Is that we do need a singular body that does evaluate resource projects, their viability, their permitting, ultimately the grant, the social license and the economic license to operate. Right now, it's, you're dealing with, First Nations, local communities, provincial, federal, and then you probably have, then you have all sorts of, sub-federal organizations, provincial organizations, the Ministry of the Environment, Ministry of Transport. And it's like literally, like, they're all had a seat at the table there, and it's like herding cats. It just takes, a really long time. Now that's to build a mine. Okay, now to do exploration, in doing drill holes, still not easy, but certainly materially easy than building a mine, which is a whole different ball of wax. But, for example, in British Columbia, great place to do business, but I mean, it took, and I think this was also a function of COVID. But I mean, I think so they had staffing issues. Everything's slower. I mean, you go to the airport, your bags are going to take an hour now. It's just everything. So it's like everything is slower, and I think that's due to staffing. But I mean, it took us, 8 months to get our permits. It's crazy. We had support of the First Nations. We had made a number of trips out there to get them on side. They supported us right into the gate, and actually had written to the province saying, "Yeah, we support them. Please give them the permit." Still, no permit. So there was no, and this, the site had been clear cut, so we weren't disturbing. We're only putting 7 holes. So like, why weren't we getting the permits? I mean, you should be able to get a permit much quicker than 8 months when we're looking to do something that's very acceptable, right? I mean, it's not like we're, doing anything too crazy, poking some holes. We're looking to find an economic deposit that would provide, wealth for the communities, wealth for our shareholders, but wealth for the communities, royalties, taxes, employment. We employ First Nations people, local people. Why can't we just go? It's a little frustrating. So anyways, enough of that rant. But I mean, I think, like, if we are going to get serious about, and I think, the time is coming, is we have to get serious about jobs again, real productivity. And I think mining is, a perfect solution to all of that. In addition, not that I'm a believer in the stated goals for this energy transition, not the goals, but the timeframes. I'm not a believer in it at all. It's going to take a lot longer than everybody thinks. But even if it's going to take twice as long as they're forecasting, they're going to have to get serious about the securing supply of metals. So, but they're shutting down the pipelines. They're shutting down the oil. They're basically trying to ban fossil fuels. Fine, without thoughtfully considering what's going to replace it and how. So something's going to break. I don't know what it is, but something's going to break.
I agree there, and I think that another thing that I've been thinking about is that people put a lot of pressure on obviously, and it's rightfully so, governments and removing red tape and stuff like that, but financing the right companies to do that is also an important thing, and that's where retail shareholders also play a role in. So getting better prepared, understanding the companies better, understanding what to put your money in, can in the end have an effect on the supply of the metals. Because if we keep financing lifestyle companies because their stock goes up, that might be and if we keep sort of rewarding that behavior, that might also be counterproductive over the long run. I don't know if that's true, of course, but that's sort of what I'm thinking. And the reason why I'm having these conversations with people that are in the field, trying to figure out how do they look at these things, how do you really look at these things in the field? Because I can open up a book or a couple of books and probably figure out all these perfect definitions and ratios and stuff to do, but how does it really work in the field? So that's the interesting part here, and I'm happy that you brought that question up. But what else? We talked about the people, we talked about the project, we talked about the jurisdiction. Those are all things that I would look into. What else would you look into? What else matters
for a project? I think. It starts with the commodity. It starts with the jurisdiction, the people in the previous work, and then perhaps is it attainable? Can I purchase it at a price that I deem to be fair? Is there a transaction to be made? Which is oftentimes, more often than not, there isn't. for whatever reason. If you're going to stake a project, that's, I don't say it's easy because it's harder to have that geologic thesis. But if you're going to acquire, for example, I go up to another junior company and I like their asset. It's their only asset is a primary asset. They're not going to sell it, right? Because that's their bread and butter. Or they're going to want 10x for it, and I was like, guys, it's not worth it. So we don't waste our time doing that. You look at secondary, tertiary assets. You look at times right now when companies are having a hard time raising money. I tell you right now, it's really difficult, which is great. It's good and bad. But instead of being able to sell equity, perhaps they'll sell their stepchild, so to speak. And so that is to either advance their primary project or to pay their salary. I don't care, as long as they're a motivated seller. And you asked about valuation earlier. I mean, that's one of the hardest things is you have to get two people. And that's where I think the big difference maker is in the entrepreneur, the ability to negotiate a transaction where there are no limitations. I mean, obviously, because we do have limitations in terms of laws and securities exchange, etc. But basically, the sky's the limit. It's just ultimately two people or two parties being as creative as possible to meet the needs of the other person. And it's rarely as simple as I'll give you $1 million, you give me the asset. It's much more nuanced. From my perspective, I don't really want to pay $1 million up front. I want to pay $1 million down the road. Maybe I want to option it. Sometimes I want to buy it. Sometimes I'll option. It's a little bit different, but there's lots of tools and mechanisms at our disposal that we can utilize to be creative, and we love to be creative. And that's the challenge. Is like to be vanilla is boring, and it's not like we look to be creative for the sake of it, but it's like that's how you solve those problems. And the problems exist on both sides because we have to preserve our capital. We don't want to put risk cash in somebody's pocket. We want to put it into the ground, and if we're both successful, both sides benefit, and the value has been realized. So we try and defer it as much as possible. If we do an option agreement, you'll see, we just announced one, I think today. You'll see, I think it's $500,000 in cash, but it's back ended so that we'll have a few years to test it. And is this worth it? And by the time we've spent the work commitments, which I think were $700,000, not too onerous, but after year one, year two, you probably spent half that, let's just say. You'll know if it's a dog or not. And so you at that point you can decide to continue or just walk away, and you haven't blown the bank. These things need to be tested, and if we're right, if it's interesting, then we pay peanuts. And if you're wrong, and you're wrong more often than you're right, spending $500,000, it's not unreasonable.
They say that you learn from your mistakes, and it seems like there is a lot of room for mistakes in doing that. What is one mistake that you made that maybe you learned from it, maybe you wish you hadn't made that mistake, but then eventually played out well?
Oh, I've made so many mistakes, and I try and learn from them. I try not to make the same big one twice. How can I think? Putting me on the spot. What sort of mistakes? I mean, I don't have anything specific, but I mean, I could say like. Take the money when it's there. I mean, from a financing perspective, that's not a mistake, but that's a lesson. They say, the golden rule is when the money's there, take it. And it is the golden rule because you never know what tomorrow brings. Don't, pride cometh before the fall, as they say too, so don't get too high on yourself. Oftentimes, you're a fan of Rick Rule, so am I. He's got one-liners. Says, don't mistake rains with the bull market. Sometimes you get lucky. But I think if you get lucky more than once or multiple times, it's not just luck. There's probably luck involved, but, you probably positioned yourself to be lucky through hard work and investment and good people. But, don't don't forget to make yourself well financed. I mean, that's one thing that I'll say is key. Don't shortchange your treasury.
What about knowing to move on? Because you have to know to do that. Spoke about American Eagle. They failed twice. Tony was here and he told me if you're gonna fail, fail fast. How do you know that you have failed? I have a portfolio. The majority of stocks are down. I don't want to sell, but I also at the same time do know that there's bad apples in there. What do I look at? Do I just take the loss? How do I know that I have made a mistake? I have to move on. I learn from my mistake and I do better the next time.
Well, it's a personal decision. Every decision is like a snowflake. So I couldn't answer for anybody else. You never know when to move on, and you can be wrong. Obviously, let's talk about American Eagle. You raised that. American Eagle 2.5 weeks ago was 3 cents. Okay, and down from 20 cents. Everybody thought that was a dog, and a lot of people sold. In fact, Tony likes to tell the story. Some guy wrote on the board, the morning before we put out that press release, Tony should be fired, which again I laugh about. You guys totally wrong. I mean, but when you look at the share price, I mean, it's not an unreasonable conclusion, but this individual is not understanding what's going on and doesn't know Tony and just looks at the share price and like, it's an ugly share price, right? Cut this dog. And they wouldn't have been wrong. Because they didn't know that a new piece of news was coming out. How could they have, right? So and I'm sure people who unloaded a bunch of shares at 3 cents are kicking themselves. But it wasn't the wrong decision. It was. I mean, that was the right decision for them at the time. How could they know? You just don't. So, and you can't kick yourself, with that. And I do, even though I do. I've been in that situation before where I've cut losers. I'm talking about shares, which are much easier to cut, whereas projects much more difficult, and you never really know. You could spend a lot of money on a project like NAC, like there has been, I think, $8 or $9 million spent. I'm not sure how that was all calculated, but I think that's somewhat of an estimate. And someone, somewhere said enough's enough. And they walked away, but there's also externalities associated with that, such as the copper price or the company couldn't, as I said before, you have to stay in the game. So all else equal in terms of properties, I'd just love to accumulate a basket of portfolios and never sell them, unless they generate wealth and get developed. But like they're like little I don't say free options, but options. So that comes down to what is your carry. I mean, are they like, for example, in Nevada, to carry land in Nevada, it's crazy expensive. And you have to pay taxes on it every year. And, it's very onerous on the company just to do nothing in bad times. So if you got a big land package, it's very expensive in Nevada. That was part of the reason why we're like, let's just move on. And it's possible, it's entirely possible that there is a world-class deposit on the project that we walked away from. So maybe I will, be very upset one day. And you know what? I hope there is, because the underlying guy that has it, Dave Shadrack, he deserves a discovery. I'd love, I would be very happy for Dave, but I'd probably feel pretty stupid. But at the time, it was the right decision for the company because we were faced with, okay, well, we're burning this money here. We've drilled a couple holes. We haven't fully tested our thesis, but we've come to the conclusion that to do that is going to require a significant amount of capital. We have, $2, $3, $4 million company. We can't possibly, raise that money to test it properly because the market's just totally fallen off. We haven't delivered any success early on. In the meantime, we've got, property tax bills coming up. What do you do? If we didn't have to pay, if our carry was low, we just put in our back pocket, wait for better times. And then we would hit NAC, and maybe NAC turns out to be a huge success. And then we're in a situation where we can raise $10 million and go back to Nevada. But, there's all these, external forces that come into play. It's a very dynamic situation. At the end of the day, you just got to make the best decision based on the information you have available to you at the time. And with the understanding that things can change and you can look stupid or, you just move on with your life.
Are you a retail investor next to what you do? Yeah. What you do with
Yeah, I'm either in cash or in the junior mining sector. That's it. So I'm very concentrated, and I balance my risk by having a good deal in cash.
What is too many companies to have? Because I think I have too many. I've got 20.
I don't have any, like, I'm super, like, I'm very concentrated in my portfolio. I'm not materially invested in any one particular name. I I and there's no rhyme or reason. I'm not, a great stock picker. That's not my forte. I mean, I've done all right. I'm up, but people always ask me, give me a good name, and I can't. I mean, I just focus on my stuff. I bought, I just recently bought, I put it on CEO.ca. I bought a piece of Murchison Minerals, for example, not a big piece, but just on a spec, and I'll probably just trade it. But and I'm not a trader, I'm an investor, but I just there was a unique situation where they put out, XRFs on a couple holes. I will never say never, but we do not put out XRFs for good reason. And I think the market was suspicious of that. But then a couple of weeks ago, they put out the assay for hole number one, and it correlated quite well with the XRFs. And I said, okay, so maybe they're doing a good job at XRFs. And so, but hole two was the hole, and actually just came out this morning. I'm sort of anxiously waiting to see if my trade turns out. But yeah, the hole two was just published. I was just reading it before I came to see you, and correlated very nicely. And that's a big hole. I can't remember what it was. Over 1%, over 100 meters. And, they're $20 million company, should be worth more. I don't know much about the project. I could probably pick it apart. I won't. But I'm not certain. I think, like, if that was call it a true nickel sulfide discovery of 100 meters at 1%, those are very rare. I mean, it should be a lot more than it is. So maybe someone, the market's pretty smart. So it doesn't like it for some reason. So I'm not going to be a long-term investor, most likely. And maybe I'll be totally wrong, and maybe it'll turn out to be Voisey's Bay. But I'll probably just get in out of that trade and move on. Or maybe I'll take my gains. This is also something I do, is like, if I make a double, I'll take my money back and just let the rest ride.
Like a free ride.
Yeah,
that's what Rick Rowe calls it. Yeah, it's
not a bad strategy.
Okay, it's not a bad strategy. There's lots to talk about here. I know we almost have to round it up here. What is something else? Is there something else that you came here hoping to talk about, but I'm failing to bring up?
Oh, I just wanted to, I was very pleased to, I follow your channel. I think, you do a good job. You ask tough questions. Talked to you before. I think, there's a lot of similarities in how we view the market. And, I just wanted the opportunity to sort of talk. I said, shoot whatever you have at me. And so, I mean, I didn't have an agenda. I'm just here to chat. And obviously, but I am here, selling my wares. Like, make no mistake about it. I'm here promoting the ore group, QC Copper. I'm here obviously in support of baseload metal energy, which had big news out yesterday that nobody cared about. That you should, and I think they will eventually. Sometimes it takes time, and of course Tony as well, and then ore finders and Mustango. I mean, these are my babies. That they're all of our babies. It's it's a total team effort. I'm here to promote who we are as a group, how we operate, and let everybody know that we're also, which I think is absolutely critical, is we're well aligned because we're shareholders. As I said, a significant portion of my wealth. Wealth is a sort of a lot of connotations. So, like, my net worth, how about that, is tied up with the success or lack thereof of my company. So if my companies don't do well, I don't do well, which I think is important, because I literally, it keeps me up at night.
I can only assume so. Thanks a lot for investing in time. Thank you for letting me pick your brain, and for also for this room. So yeah, thanks a lot for doing this.
My pleasure, Antonio. Thank you.